Today, let's dive into the latest market movements with a particular focus on SoFi. Hello everyone. Welcome to Daily Stock Update. If you are new to the channel, be sure to subscribe to the channel and turn on post notifications by hitting the bell so you never miss any of our uploads, and also enter our giveaway. But before that, alert, this is not a financial advice video. The trading session has just wrapped up and there's a lot to unpack regarding what influenced the price action, key data points, and overall market sentiment. SoFi closed the day down by 2.11%, reflecting a widespread downturn across various stocks. Initially, there was a glimpse of optimism, not just for SoFi, but across the board, largely driven by Apple's announcement of a staggering $500 billion investment. However, that excitement was short-lived as broader market concerns, particularly inflation worries, took over. The market quickly shifted its focus to economic data from last week, resulting in a significant drop that impacted nearly every stock, including SoFi. During the session, SoFi hit a low of 13.81 cents, a level that likely triggered several stop losses, leading to an amplified sell-off. This phenomenon isn't exclusive to SoFi. Many stocks saw a similar pattern where sharp downward movements were followed by slight recoveries. Despite this rebound, investor fear remains prevalent, contributing to the overall market uncertainty. Importantly, there were no new SEC filings or company-specific news releases from SoFi, meaning its price action was primarily dictated by broader market sentiment and anticipation surrounding upcoming earnings reports. A crucial factor to watch this week is NVIDIA's earnings report, which could significantly impact market sentiment. History has shown that strong earnings from a major player like NVIDIA can shift market momentum positively, even during bearish phases. Similar scenarios played out in late 2023 and early 2024, where a single earnings beat triggered a broad rally. Whether that will happen this time remains uncertain, but it's something investors are closely monitoring. An interesting observation in market behavior is how investors often express eagerness to buy at lower levels but hesitate once those levels are reached. A common trend, seen not just in SoFi but in various stocks and even Bitcoin, is the shift in sentiment once prices drop. Many investors previously expressed enthusiasm about buying at $15 or $14, yet now, as SoFi approaches those levels, there's growing talk of even lower targets around $11 or $12. This highlights the emotional component of investing, where fear often overpowers rational decision-making. In terms of short interest, SoFi saw an increase of 373,000 shares being shorted, bringing the total short interest to 11.84% of the free float. This equates to approximately 127.4 million shares being shorted, marking the third consecutive day of an uptick in short positions. This data indicates that short sellers are capitalizing on market fear, further pressuring the stock. The cost to borrow remains at relatively high levels, showing that bearish sentiment among institutional investors remains persistent. On the options front, call volume for the day reached approximately 25 million, with puts totaling 10 million. This means that 45% of options activity was on the bullish side, which could suggest some investors are positioning for a potential rebound. The total premiums traded amounted to $34.6 million, consistent with recent days. A closer look at call options reveals a concentration in the $16 to $17 strike range, suggesting expectations of a recovery in the near future. This could be influenced by economic indicators such as GDP and PCE data, as well as the aforementioned NVIDIA earnings report, which will be crucial in determining market direction. Despite this, bearish traders are eyeing a drop below $13.50 in the coming sessions. With SoFi already hitting $13.81, there isn't much room for additional downside before reaching that target. Market participants should keep an eye on technical levels and any potential shifts in sentiment that could influence short-term movements. A look at large transactions in the secondary market, specifically trades exceeding $100,000, shows limited activity, suggesting that institutional investors aren't aggressively buying the dip. This aligns with broader market trends, where big money has yet to rotate significantly from money markets into equities or crypto. Historically, when stocks pull back considerably from their highs, institutional investors tend to reallocate capital into undervalued opportunities. However, this hasn't happened at the expected rate, raising the question of whether they are anticipating a further downturn. Dark pool transactions tell a slightly different story, with a notable level of activity observed. Large players, including short sellers, often use the dark pool to execute trades with minimal market impact. A few significant trades, including one at 1.08 million shares, were recorded. While this is noteworthy, it doesn't drastically alter the overall sentiment. SoFi remains in a state of uncertainty. Management's role in stabilizing investor confidence is crucial. A direct investment from company leadership, particularly from CEO Anthony Noto, could serve as a strong signal to retail investors. If management demonstrates confidence by purchasing shares at these levels, it may help shift sentiment in a positive direction. Without such actions, SoFi stock remains largely at the mercy of broader market forces, including short selling and institutional strategies. Looking at technical indicators, SoFi is trading between support and resistance levels, with 13.89 cents serving as a critical support point. The stock tested this level and bounced, reinforcing its importance. Moving forward, resistance levels to watch are 14.49 and 15.45. Breaking through these levels could indicate a potential reversal, while failure to hold support could lead to further downside. From an analyst perspective, no new ratings or updates have been issued. However, previous Elliott Wave technical analysis suggested a potential move toward 12.29 to 13.21, indicating that a further pullback is possible. On the chart, the most critical level remains $13.85, a zone that has been tested multiple times. If this level breaks, further downside could be expected. Additionally, the 100-day moving average currently sits near this support, adding to its significance. If selling pressure continues and this level fails, SoFi could find itself trading between the 100-day and 200-day moving averages, with the latter positioned at $10.48. While a drop to that level wouldn't happen overnight, it remains a possibility in a worst-case scenario, particularly if NVIDIA's earnings disappoint. A key development to note is that SoFi has now broken below the supertrend indicator, shifting its trend to bearish. This will likely lead to increased algorithmic trading pressure against the stock, as many trading algorithms respond to technical signals. The shift below the 50-day moving average, which occurred on February 20th, was an early warning sign of potential weakness. The coming days will be crucial in determining whether SoFi can regain momentum or if further downside is on the horizon. To sum up, SoFi remains in a challenging position amid broader market concerns, increased short selling, and uncertain institutional sentiment. Investors should closely monitor technical levels, upcoming economic data, and NVIDIA's earnings, as these factors will play a pivotal role in shaping market direction. Friends, that's all we have for you today. What is your opinion about today's video? Get involved and let us know in the comments down below. Thanks for watching.